Good morning, everyone, and welcome to the webinar. We're excited to have Anthem with us today to present their Balance Solutions product to you today. You've been watching our new technology on the GoToWebinar. So we've been running our ads instead of talking our ads. So we'll move on from that and see if I can get this. Uh-oh. No, I can't get my screen to move.
Can you just click on it? Or use the arrow key? There you go.
Oh, we're going. I don't know why I didn't move before. So, all right. So our topic today, as I mentioned, is Anthem's balanced funding, and we're going to have everyone in listen-only mode for the webinar. But if you have questions, please type them into the question box, and we will be sure to get to everyone's questions at the end of the presentation today. Again, I'm Jeff Lewis. I'm a Director of Employee Benefits up here in Cleveland, handling Northeast Ohio, and I'm your host today. If you need to get a hold of me, here's my contact information. With anything after the webinar, we'll also have the slides available for everyone after the webinar as well. So at this point, I'm going to go ahead and turn this over to Anthem. Today we have with us Lori Canine, who runs small group for Anthem in Ohio, and Kathy Shiplet. So I'm going to have the screen turned over to them, hopefully. Take it away.
Great. Thanks, Jeff. This is Kathy Shiplet. I am the small group sales rep in Cincinnati. I am going to share my screen here, so let's make sure that this works out properly first. Jeff, can you tell me, are you seeing the proper screen?
Yes, I am.
Okay. Oops, I think I just messed that up. Okay, are you still seeing it correctly?
Yep. Looks good now.
Okay. Okay, great. So everyone, thank you for joining us today. We're going to discuss Anthem's balanced funding product, which is available in our small group market starting with 10 enrolled employees. So after today's training, you should be able to answer some questions about Anthem Balance Funded product, including what is it? Why would you choose ABF? Do the products look like? Who's eligible for this? How do you get a quote? And the most important question of the day, what is the commission on this product? So let's start off. What is this? Anthem Balance Funding. This is a self-insured arrangement, but it has integrated stop-loss coverage. So contractually, this is an administrative services only funding arrangement. It is an ASO, but it acts in many ways like a fully insured plan. With this type of funding arrangement, it allows the group to benefit from the advantages of self-funding, but limiting some of the key disadvantages for the smaller employers. It provides the stability of a fully insured product with upside potential of the self-insured. And I'll talk more details about that, obviously, through the training. So this plan offers fixed monthly payments and it offers money back savings potential when the claims experience is better than expected at the end of the renewal period. If the group's actual overall claims are higher than projected, the group is not liable for any additional costs as that is covered by the stop loss coverage. But if the group's overall actual claims are lower than projected, then the group gets to share in the savings. Are my slides changing? I feel like they are not advancing. Are you still seeing the first slide?
Yeah, I'm still seeing the first one.
Okay. Let's see if we can, there we go. Apologize for that. We'll get that up. Okay. So why Anthem Balance Funding? Why would this be something that you want to share with your group? It combines the benefits of self-funding with the stability of a fully insured plan. So you have fixed, predictable monthly payments that include money back savings potential when claims experience is better than expected. It has stop loss coverage to protect the clients from the risk of large group claim or from the large claims. There's no costs beyond the group's monthly payments. There's also no deficits that are carried forward. There is a pre-funded claims run out, and this means the employer can avoid unexpected costs if they term at the end of the contract year. There's also reporting with cost insights that are available to the group throughout the year. Well, my goodness, I am having some system concerns here.
Are you clicked into PowerPoint?
I am. Okay, here we go. So there are 5 components of ABF fixed monthly rates. Those are the ASO fees, the individual or specific stop loss, the aggregate stop loss, the paid claims fund, which is the expected claims plus the aggregate stop loss corridor. This is pre-funding the group's maximum paid claims liability. And then there's terminal liability, and this is the pre-funded claims run out. And this is to help avoid unexpected costs if the group terminates the plan at the end of the contract year. Our ABF stop loss is standard for all small groups, and this cannot be changed to a different amount. So the specific stop loss for our small group product is $20,000, and the aggregate stop loss corridor is 110%. If at the end of the year the claims are lower than expected, the group would receive 50% of the surplus as a credit towards future bills. Anthem retains the additional 50% of the surplus. If the claims are higher than the paid claims fund, the deficits are forgiven and the group has no additional liability. If the group stays with Anthem but switches from an ABF product to fully insured or a different funding arrangement, then they are eligible to receive the credit if there is a surplus. So they would still receive that surplus. It would just take a little bit of extended time to make sure that we have the run out covered if they move to a different product within Anthem. If the group leaves Anthem, any paid claims surplus funds would roll into the terminal reserve and be used to pay out the claims run out if needed. There's no refund if there is a surplus, but likewise, there's no additional liability if there is a deficit. So if the group renews on ABFs, the surplus settlement would appear on the first invoice following 90 days after the end of the contract. So, for example, if we're looking at a January renewal group with a 12-month contract, the settlement would be on the April invoice. If the group stays with Anthem but moves away from ABF, then any balance in the claims fund would roll into the claim runout fund to cover additional claims run out. The fund is then held for the 15-month runout period plus 30 days. And at that point, any settlement is passed back to the group. The product portfolio for Anthem Balanced Funding should be very familiar to you. We use the Blue Access PPO network. The pharmacy is the Essential Formulary with RX Choice Tiered Network and Retail 90. And we also include the well-being solutions that you are used to on small group and other 51 to 99 plans, being the foundational programs and the Engagement 200 package. With our medical plans, we have a portfolio of 20 different plans. This includes our traditional copay plans as well as HSA compatible plans. And they actually match several of our most popular small group plans. So we didn't go in and try to be creative. We looked at what was most popular in the market and we moved that into our ABF portfolio. The full benefit guide is available to you. I will have those marketing materials. I will share those with Lindsay and Jeff so that they can have those available to you along with the slide deck that we're going over today. But I also wanted to let you know that our marketing materials are also available online 24/7 at anthembrokerhub.com. And this would give you information on all of anything Anthem. So everything for Ohio, large group, small group, if you do business in other states, all of the Anthem states use the same anthembrokerhub.com. So you would filter it down by the state, the segment that you're looking at. If you're looking for alternate funding products, you're looking for dental information, you can filter all of that down. But the marketing materials are always housed on anthembrokerhub.com. So if you're out and about and you didn't bring your funding guide with you and you want to take a look at that, it's always available on this website. As I'd mentioned, we have the same foundational programs available in the Anthem Balance funded products as we do in our small group plans. This includes the foundational programs. Many of them are behind the scenes and designed to provide additional support and guidance for conditions like end-stage renal disease, transplants, cancer, autism, NICU, and many more. And also another program, hopefully that you are familiar with, is our Engagement 200. This program offers rewards in the form of gift cards for completing certain activities. And there's a wide variety of activities to choose from, starting with logging into anthem.com or logging into your Sydney app to complete a health assessment or to track steps. Members can also receive rewards for participating in condition management programs. There's preventive care rewards that are triggered by the claims coming through. So, for example, if somebody has a mammogram completed, there's nothing additional that the member needs to do in order to receive that amount that is credited for doing that preventive care. There is a maximum of $200 per year per person, and this is available to the employee and their spouse or domestic partner. The program is very easy to use. It's managed on the Sydney mobile app, and is once the member has achieved a minimum of $25 earned, they can select gift cards that they want to receive and just click on the app to redeem. And they immediately receive a code that can be used for the gift card amount. So immediate gratification, always the best. The whole health savings credits are available also for our Anthem Balance funded plans. These are available when you write dental, vision, or life alongside of the ABF medical plan. The amount is dependent upon the size of the group and the lines that are added. So the credit will actually be applied to the administrative services fee and is issued as a one-time statement credit within 90 days following the effective date. I do want to mention that this does exclude voluntary products. So this only applies if you are writing non-voluntary products, but as you hopefully know with Anthem, non-voluntary products does not mean that the employer has to contribute to the cost of the program. We go strictly on participation. So if you have any questions on that, we can talk further through that, but just know that non-voluntary does not require the group to contribute to the cost of it. We just have to meet participation requirements in order to offer those rates. So as I'd mentioned earlier, Anthem Balanced Funding offers reporting. This is something that you don't typically see in small groups, certainly with our products that we offer today. So there are reports that will be posted on Employer Access in addition to the invoices. That's where the group will see their invoices as well. But there's a settlement tracking report that will show if the group is running favorably or unfavorably. The enrollment detail report, which lists the members' enrollment details and invoiced amounts, and this is broken out by the components. There's also an enrollment summary that lists current and retroactive changes and credits by subscriber. There's also additional reporting that will be available that your client can see if they're on track for a refund, what is driving their claims utilization, benchmarks to compare themselves to other clients of similar groups, potential cost savings opportunities, and these reports would be delivered by the Anthem account manager. And the timing is of when those are available is based upon the effective date. So let's talk about who is eligible for this program. As I had mentioned at the beginning, our Anthem Balance funded product is available for groups that have 10 or more enrolled subscribers. So we have to have a minimum of 10 enrolling. The group does have to have prior coverage. So if this is a new program that they are putting in place, they would not be able to enroll in ABF. All of the small group eligibility and underwriting rules apply. So we're talking about participation requirements, contribution requirements, being situs in the state of Ohio, etc. All of those underwriting rules would still apply on the ABF product. So I do want to mention we are still leading with our MEWA products. So the MEWA product it is required that a pre-screen must be completed for MEWA prior to requesting an ABF quote. If that pre-screen is at our lowest factor, a 0.55, that is our lowest factor, and the rates are not competitive with what you are seeing. If you have competitive data from another carrier or with their renewal, typically we're talking about a group that's on a balance funded program. If the MEWA rates are not competitive, then your broker consultant can request the ABF quote. The reason for this is that our MEWA products are restricted by the small group rating rules. So we have filed rates with our MEWA products. We cannot go below that 0.55 rating. So even if you are presenting a group to us that is, wonderful group, very clean, we cannot go below that 0.55. Those are our filed rates on MEWA. That is one of the differences with the ABF being an ASO product. We do not have those rating rule restrictions. So if you get a pre-screen back, it's at a 0.55, there's more than 10 enrolled, and the rates are not competitive, that's when we need to get with your broker consultant. They will contact myself or Nancy Kazenko, and they will say, hey, these rates aren't getting us where we need to be. We really want to look at ABF. And that's when we will flip this over to the ABF underwriting team and get that proposal for you. The second way that we would be considering ABF is if the group is currently on a level funded plan, you get our MEWA underwritten proposal. The rates are favorable, the rating factor is favorable, but they really like being on a level funded product. We can additionally request that ABF proposal from that underwriting team. If the MEWA quote is favorable. So what I mean by that is if you have a group that gets a max rate, you see a 1.4 come back on your MEWA proposal. That's not going to be different moving over to ABF. So if the rates are not competitive on the SOCA MEWA and we're talking about a higher rating factor, ABF is probably not going to be the answer. But those considerations, those are things that we can talk through together to make sure that we are offering it where we are able to. But if the rates are favorable, but they just really like the level funded type of program and want to stay on that, we can certainly request that quoting for them. I do want to point out ABF is not guaranteed issue and it can be declined. We can decline to quote it. This is a separate underwriting team from who is underwriting SOCA MEWA. So they do things a little bit differently. They take more information into consideration. So they do look at things a little bit differently. It's not a guarantee if you have a SOCA MEWA quote that we're going to be able to produce the ABF. Turnaround time, we know that this is really important. We work closely with our underwriting team, just like we do with our MEWA underwriters here in the state of Ohio. We can get this turned around pretty quickly for you, depending on volume. And I know that's, a really vague answer, but it's true. If there's, a pile of groups ahead of you, I can't say you're going to get that back same day. But typically within 3 to 4 business days, we should certainly have that quote back to you, if not sooner. So if in order to request an ABF quote, first we need a MEWA underwritten proposal, the quoting census, which we will have from the underwriting that we have done with the MEWA. And of course, everyone knows we do require the applications. So I just want to make that clear. MEWA underwriting requires applications. Therefore, with ABF, because we have to do the MEWA quoting first, we still require those applications. So that underwriting team will be looking at the apps as well. So we need the underwritten final quote, the quoting census. We do require the current renewal, which we don't require for MEWA. So this would be something that I would be asking the broker consultant for when we say, okay, this is one that we really want. It's a good candidate for ABF. We want to take a look at what that proposal would be. I would need the current renewal for the group, and if there's any competitive data. So for example, maybe we're not, you've gotten a proposal from another carrier that looks really interesting. I want to make sure that I am telling my underwriter, hey, they've got a competitive quote that's 10% under. So even though we are under renewal, we're not under the competitive info. So if that's our goal, is to try to work the numbers to get below that 10%. The more information we can give underwriting so that they know what their target is, they can work more efficiently to try to get us there up front. So we need the competitive data if that is available. And if the group is currently on any type of an ASO program currently, we would need those reports, the high claimant reports, any kind of reporting that they have available, that would be needed also to send to the ABF underwriters. Implementations. So implementation, and I know you guys don't handle this personally, but just so that you know what to expect and what is being handled by Cornerstone on your behalf, it is done on our quoting and enrollment tool on the producer toolbox, the same as what we do now with our MEWA programs. The paperwork is a little bit different for the Anthem Balance funded program. So there is an employer packet that is going to be sent via DocuSign for the group to sign. This includes the employer application. There's a HIPAA notice and identification of designated representatives. There's a business associate agreement. the protected health information report request form, and stop loss policy application. So the documents that are included in that employer packet are a little bit different than what we have in our MEWA program. EFT is required for payment on the ABF program as well. The first month's invoice will be drafted via EFT. No binder check is required for that. There are a couple of differences that I do want to point out here. There's two pieces of information that we will be sharing with the group after the group is installed. And first is the New York HICRA form. This document will be sent to your broker advisor for the execution after the initial installation. So this is something that we have to have the group sign and send back to us. And then we will also be sharing the signed contracts through your Anthem sales team. Those are delivered in about 2 months after the initial implementation. So those are two differences that you will note with the implementation from what you have with MEWA products. Commission. Plain and simple commission for this product is going to be, and is 32 PEPM straight across the board. So that's always good information to have. And next up, there we go. Okay. Um, that is the formal training. So there's additional considerations that we, want to talk through, some differences between, what is it like for the group if they're on a MEWA versus ABF? What do you need to take into consideration with that? We also want to talk through, as 5/1 renewals have just been released. We want to talk about the opportunities for renewal business and what that would look like. So at this point, I do want to turn it over to Lori Canine. She is our Director of Small Group Business in Ohio. She's going to talk through some of the differences and considerations with the ABF product.
Morning, everybody. Hopefully you all can hear me. So thank you, Kathy, for sharing everything that you've shared so far. So a couple things that I wanted to mention. So if you have a group that's currently with us, and as Kathy mentioned, we just released our May SOCA benefit plan renewals this week. So I'm sure the Cornerstone team is working very hard to get those distributed to you. Those groups, there could be opportunities for some of those groups to request or review the thought of joining the Anthem Balance Funded product at this time, and also your other groups throughout the year, whether they're our old grandmothered groups that have been on the books for numerous months, and those groups renewed in January for the most part. And then, of course, there's potentially opportunities for groups that are maybe on an ACA plan, and for whatever reason, perhaps they've learned that that plan design doesn't make sense for them any longer and they want to look at another offering. So for renewals, same requirements to buy the product. You would need a minimum of 10 enrolled, but we want to have some consultative discussions with you as we work through the renewal process. So to Kathy's points previously, if a group is just considering a level funded product because they feel that they may earn a surplus and that's something that's attractive to them, definitely talk with your Cornerstone partner, and we will work together on the account management team to talk through if this group, based on the way it's running, if it could be a good fit for an Anthem Balance funded plan. Also, Kathy mentioned, with our MEWA groups, there are minimum and maximum risk factors. So if the group is at our lowest risk factor, those are our filed rates. We're not able to go any lower than that. Maybe the group wants to, consider a balance funded plan because they feel their risk, is appropriate for that. Something we can talk about at that time as well. And then, there could be situations where a group they're not necessarily at our very bottom rate, and the rate itself really isn't what's driving the request or the thought process. Maybe the group, is still a good running group. It's not at our very lowest rate, and they maybe want to consider looking to move to a balanced funded plan because again, they feel that they could earn a surplus and that might be a better fit for them. So there are numerous reasons a group may want to change to Anthem balanced funding at renewal. I think every group situation could have, some different reasons behind that. Of course, maybe, there's a census change and the demographics of the group have changed maybe since the renewal was dropped. So where I'm going with this, I would say just be open to considering the product, not only for the business you're looking at to bring to Anthem as a new customer, but also, with your renewals, if you feel that that is an opportunity that your client is interested in, we would definitely be willing to have that conversation. There are some groups that perhaps the risk is not right for this plan, for the Anthem Balance Funding plans. Like Kathy said, we could decline to quote them, but we would be able to have that conversation with you ahead of time to save you from going through the full underwriting process to receive an Anthem Balance Funded quote. So Kathy, I mean, those are the comments I wanted to make, speaking to renewals. We are very open to having any discussions that you feel would be appropriate for your clients that have 10 or more enrolled.
Great. Thank you, Lori.
Thanks.
At this time, we would like to open it up for any questions that you have. We'd really like to make this a conversation, make it as worthwhile as possible for you. Um, so if we are able to do that, answer any questions that might be out there. And if we have time, I do have some slides that kind of just go through some FAQs that we can go through because I think it gives some additional important information. So let's start with, are there any questions out there?
Okay, Kathy, this is Jeff, back on. Can you hear me?
Yes.
Okay, good. So we don't take questions live, but we can answer questions from the chat box. So we do have
Perfect.
several questions that have come along, so we can get to those.
Okay.
I did have my own clarification, kind of based on what Lori just said. So, Kathy, as you presented, for prospects, say they're not currently with Anthem, then we're looking for groups that are either at the lowest rate factor, 0.55, currently level funded, and then they've got to be 10 plus enrolled. So is that the only time that a broker should ask for the ABF? I'm a little unclear based on what Lori
Okay.
just said.
Yep. So if they're at a 0.55, the reason that I bring that up is because of the rating rule restrictions. With the SOCA MEWA Farm Bureau, we cannot go below a 5.5 filing. So our hands are tied. Even if it's a great group, we can't offer better rates on that. We don't
Sure.
have those restrictions with the ABF. So anytime you have a group of 10 or more, you get a 5.5 rate or a 5.5 rating factor and the rates are not competitive, absolutely we need to take a look at ABF. So that's an easy one. That's, the black and white of it all, 5.5. We need to take a look. Other than that, it becomes, the situation can be different with every group. So they don't have to be currently level funded in order to look at this. But if they are level funded and they like that type of product design, that would be a reason to say, let's talk about this. Can we request a quote? If they don't have to be a 0.55 in order to request this, but the that is the only time I think you can anticipate the rates being lower, if that makes sense. So if you have a group that is at a 0.70, they may request an ABF quote, but the expectation wouldn't necessarily be, oh, we want more competitive rates, because that's something that we can work with our underwriting team on that SOCA or Farm Bureau MEWA quote. we can
Mhm.
work to try to reduce that factor. So we wouldn't necessarily be flipping it over to ABF trying to get lower rates if it's a zero point 0.7. So if our zero point 0.7 is competitive, but they like the level funded platform, we can quote that. If you have a group that is a max rated group, it's a 1.4. That's not going to change by going over to ABF. So if our rates on the MEWA product are not at our lowest and it's not competitive, then we need to have those conversations about the MEWA product first, whether or not we can reduce the factor if there's room on that. Does that clarify it? Does that muddy the waters at all? I know we're trying to make something that is, kind of a case by case situation. We're trying to put some clarification around it.
Yeah, that's helpful. I think, so what you're saying is if they're a zero point 0.7 factor on MEWA, they're probably going to see the same price for balanced funding.
Correct.
If Anthem agrees to even offer it
Correct.
for that
Yeah, and
group.
Jeff, it's Lori. I apologize if I confuse matters. We do not want to compete with ourselves, as Kathy
Right.
was saying, but we don't want to say to a group, um, no, it's not available because you're not at our very best rate. If a group wants a balanced funded plan and they're a good fit for the product, we would release a quote that is, in line with the MEWA rates.
Right. Okay. And then you may be more inclined to offer it to current Anthem clients that may be grandmothered, for example, or not necessarily.
We It really depends on where that group is and what they want to do. So really any group that meets the qualifications, 10 or more enrolled, and they're the proper risk for a balanced funded group, we could have that discussion. So I'm keeping it very, very open, meaning, if it's a group that, you know, looks like it would run well and would be a good fit for a balanced funded plan, and let's say they're shopping the market, I don't want you to think that they're not able to look at our balanced funded plan as well. So I
Hmm.
think it's important when you have those situations, if there's a group with, again, 10 or more enrolled, they're interested in valid balance funded for whatever that reason is. They're at our very best rate on our products that have small group rating rules, which would be the grandmother plans and the MEWA plans, and they need something or they're looking for something a little lower. Or they're a group that does have, good risk and it would make sense to go balance funded. We just wouldn't compete with whatever plan they're on today if it's an Anthem plan.
Right. Okay. Yeah, that makes total sense. And I think, to me, the lesson there is, unless it's the lowest risk factor, don't go think you're shopping for a lower rate by looking at this product. Right. So,
Right. We're not going to
well,
compete with,
yeah.
and the balanced funding the intent isn't to compete with the MEWA plans.
Yeah.
So,
Good. Okay.
it's important. Yeah. So Jeff, as you are working with your brokers, it's important to consider, a lot of the other benefits of being inside of a MEWA. There's protection of the pool. There's the small group rating rules where there is that protection of being guaranteed issue at renewal. Ohio rating rule law says we can't change that risk factor more than 15%. So a group would not receive more than 15% of the risk factor in addition to maybe any base rate changes or demographic changes. So there is protection there. And then also all of the compliance work that is included with the MEWA plans is something that a group should consider as well as they determine what type of product that they would like to offer their employees.
Okay. All right. I've got a few more questions in the chat box to put out, so let me get to those. This is kind of related. So if I've got a renewal coming up on the MEWA at the lowest risk factor, will you automatically give me an ABF quote? Do I have to show you competitive information from carriers? How do you see that
So we
working?
would not automatically provide an ABF quote. We would want to have a discussion on that particular group and just talk through what the group is looking for at renewal. So I think it really depends on each group and what they're looking for. Are they looking for a particular rate? Are they looking for the product itself? So I think we need to have those open discussions group by group. But no, we would not automatically send out an ABF quote.
Would you require competitive quotes to look at ABF?
I think it depends group by group. If that group's at the best risk factor and they're looking for a certain rate, I think we need to discuss that. I don't necessarily want to push the group to the market to shop. So I really think it just depends on the group. I don't know how often, that happens where the group just says, oh, I want X to be my rates. So I think we need to have a more specific conversation on that group.
Okay, fair enough. All right, here's a couple technical questions. If a group terminates from ABF, will they have to file a New York HCRA for terming, or will Anthem handle that?
Is the question because they're terming on or off cycle?
If they're terming anytime with the product, I know with other carriers the issues come up before where there's further work done required by the broker or the client to term the New York piece of the stop loss.
Right. I understand that piece of your question, but is your question related to, are they terming at renewal time or are they terming off cycle? And I will need to take the question back, but I just want to make sure I fully understand the question.
Yeah, I don't have any more in that question. I don't know.
If we could find that out just to make sure I wouldn't get that follow-up piece to it, I would be glad to take that question back.
Yeah, at renewal. Let's just say at renewal.
Okay.
All right, and then
Kathy, I'll take that question back.
Okay.
and we're assuming the group's responsible for filing PCORI fees.
ABF, yes.
Yeah. Mm-hmm.
I think, Kathy, maybe, do you have that FAQ coming next? Some of these questions might be in there. Sorry to interrupt you, Jeff.
Yeah, you can move to that. I think I just have one more question that was, if you have samples of the reporting that will be available for the ABF clients.
We have a couple. I don't know that we have sample reporting because it doesn't have with the actual information. Let me see what I have available and we can see what we have to share for the sample reporting.
Okay, that's all I got for questions. So if you want to
move along to, I'm going to go through some FAQs. And number one, PCORI fees are not part of the ABF premium equivalent, so it would be the group's responsibility to calculate, file, and pay the PCORI fees. So that is something to consider that is different between our MEWA products and moving to an ASO platform, ABF. 1094, 1095 tax forms. This is going to fall in line with what is happening with our MEWA groups as well. Currently, we create the documents and post them on Employer Access. It's the group's responsibility to review and for accuracy and deliver the member forms and file the employer data. So I said the word currently. So you may read into that there's hope that may be changing maybe in the next year or so. But currently that's how it is with our MEWA programs. That's how it is with ABF. Medicare primary rates are not something that would be offered on ABF plans. So with our MEWA plans, there is a process they have to go through, filing reporting with CMS that this group is under 20 so they can get Medicare primary rates. That is not the case with ABF. There will not be Medicare primary rates available for those that are 65 and over. The master contracts are generated after installation. They're provided through the sales department, and they're delivered through the broker for signature by the client. Anthem then countersigns, and then we return the fully executed document. But that all takes place a couple of months after the installation of the group. How will we handle group terms during the plan year? So this is off cycle of a renewal. So say, for example, the company is purchased and the new owner wants to term their medical plan. The group will be responsible for paying the terminal liability if they cancel mid-policy. That calculation would be done by the ASO billing department to determine the terminal liability amount. If ancillary lines are purchased, will they be on the same ID card and invoice as the medical? So there will be one member ID card for all lines of coverage. That will include the medical, dental, and vision. The invoices are going to be posted on the same portal, but the specialty lines, the dental and vision, will be on a separate bill from the medical. You may be accustomed to this from our MEWA plans currently. And as you are probably aware, since we are in the process of selling our life and disability to the standard, that installation has moved to be a separate on a separate platform. So the life and disability will be installed separately. The dental, vision, and medical are all going to be viewable on the same portal, separate bills, one ID card. We do not offer COBRA continuation administration for our ABF products. This would be the responsibility of the group or for them to hire a vendor of their choice. So that is another differentiator between our MEWA products and ABF. As Lori had talked about earlier, with the ABF is a self-funded product, so it is not filed or subject to the small group rating restrictions. So that does not have the maximum rate risk increase at renewal of 15%. So you do not have the protections of the small group rating rules with the ABF. During open enrollment, if the application is received within 31 days after renewal, will the effective date be the renewal date or first of the month after renewal? All open enrollment changes are effective on the date of renewal. Invoices are not mailed to the groups. They are posted on Employer Access, which hopefully is mostly the norm anymore. It is EFT, but the bills are actually posted on Employer Access for the groups to view in advance. When can a group expect their first invoice to be posted or drafted? This does depend on when all of the information is provided. I will tell you that installation for Anthem balance funded products takes longer than what you would be accustomed to from Anthem with our other small group products. This is more of a hands-on approach. It's a kind of on the large group platform. So installation does take longer. Just know that and expect that up front. Now, this next statement sounds kind of wild. It says it is possible that several months of premium equivalents will be drafted at once. That several is alarming to me. That has not been the norm, I will say. Several to me means more than 3. I've never seen more than 2, but we want to put that out there because billing does take longer than what you're used to on our small group platform. It is possible for 2 months to be drafted at once because of the delay. So what I would advise you as the broker talking to your groups is to let them know there it's going to take a while for this to be set up to where the withdrawal will take place. Make sure that they put that money in the account and have it there, set it, forget it, so that if it comes into the next month when it becomes, we were at the February 1st, now we're at March 1st. If the withdrawal has to be taken 2 months at a time, that's not going to be a shock to the group. It's not going to happen in advance. It would be retroactive if the group isn't set up prior to the effective date. Hopefully that clarifies it a little bit. When are the premium equivalents drafted? Once an invoice is generated, the due date is 7 business days later, which is when the payment is withdrawn from the client's bank account as an EFT. And as I had mentioned before, EFT is required, the same as what we do for our MEWAs. So if a group is terminated for non-payment, when does the reinstatement process occur? The reinstatement process would begin on the 15th of the month in which the group is delinquent. That verbiage is on their bill. So if the EFT doesn't go through, we try it a second time. If that does not go through, then within that first 15 days, if payment is not made, then the reinstatement process would start. That is the end of our FAQ questions. Does that generate any additional questions?
No, we don't have any more questions in the chat
Okay.
box. Great job, Kathy, Lori. Appreciate you guys today. I think we've got a good understanding of exactly when this could come into play, and if not, we know what to discuss and when. So thanks again for your presentation today, and we will let people go. We're 8 minutes early, so everyone have a great rest of your day and week. Thanks again
All
for
right.
attending.
Thank you, everyone.